Good good morning. Today is Sunday, August 21st, 2022. It's another beautiful day. I think we had a bit of a rainstorm last night, so the plants and everything are happy. And hopefully, I don't know what the plan is for the day, but hopefully it will not rain for the rest of the day. And so we can all go outside and enjoy some nice weather, an opportunity to work, maybe barbecue, whatever it is. That we're going to be doing on this beautiful Sunday in the days to come. This week I wanted to talk a little bit. I was listening to a gentleman give a presentation on sales and sales skills and basically how to improve and increase your sales volume and be better, I guess, at sales, or to be better as an organization, right, in teaching your salespeople, pardon me, how to sell your product. And he had some interesting points. So I'm going to go over a few of those with you quickly. And then I want to talk a little bit about how some of the numbers for analysis have changed. What numbers we're using today with the changing interest rates, changing vacancy rates, things of that nature, to put together a mathematical analysis of a property. And then we'll probably just leave it there instead of going too long-winded. One of the themes that they touched on, and really it's a theme that was revisited over and over during the presentation, was do not mistake movement for achievement. I think this is for me, this rings a bell. I think probably for a lot of people it does. I don't know, but for me it definitely rings a bell. It's something that I think we all need to be careful of. I think a lot of people do this and don't realize it, pardon me. I think many of us do this and we do realize it, but we continue to do it. So I think this is a very relevant tip for everybody. Don't mistake movement for achievement. If you have a business, whether it's your real estate investing business, whether it's, you have an actual business, a side hustle, or whatever, you have an endeavor that you're working at, right? There are essentially two types of work that you could be doing for that company, broadly speaking, right? There is impact-oriented work, right? Outcome-oriented, achievement-oriented, the important work, if you will, the meaningful work, the 80-20, the 20%, right? Or you can do the busy work, the unimportant work, the 80% work. If you have a company and you spend, let's say you have an 8-hour workday and you spend 4 hours working on prospect lists and marketing material and that sort of thing, and you only spend 2 hours, let's say, talking to your customers, and then 2 more hours doing whatever, miscellaneous stuff, right? You might feel like you had a busy day, right? At the end of 8 hours, certainly you might feel like you worked really hard and blah, 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 blah. The argument is that maybe the work you were doing was low impact work. And so therefore, forgive me 1 second. There we go. Was low impact work. And therefore, it's not actually helping the bottom line of your business, your investments, et cetera, right? It might be work that you enjoy doing more, or is easier, or it might be work that is more straightforward to track, right? Certainly, it's easy to see, did I put together a marketing package or did I not? Versus, let's say, sales, where you're talking to people and it's not necessarily clear that conversation was productive, right? So this is something that we all as individuals probably struggle with quite a bit, mistaking movement for achievement. right? And so we've got to be very, very mindful, right? Because everybody's got 24 hours in a day, and how do you accomplish anything larger than the average accomplishment, right? If you're going to use your day in an average way, right? If you take, for example, I like to use examples of famous athletes, right? You take, for example, LeBron James or Kobe Bryant, for example. These are two obviously excellent basketball players. They have the same 24 hours in their day as, say, I don't know, say a Kyle Lowry or a RJ Barrett, let's say. Two basketball players who are great. I mean, can't complain about Lowry or Barrett. They're both great basketball players, but they are not Kobe and LeBron, right? Well, they both have 24 hours in a day, right? So why is it that Kobe and LeBron are Kobe and LeBron and Kyle and RJ are Kyle and RJ, right? And one of the things, I mean, to RJ's credit, he's young, so he's got an opportunity. Maybe he could still become that. Obviously, Kyle Lowry, he can't, right? He's not young anymore. So he's the trajectory of his career is, we've seen its apogee, so to speak, right? He's not probably going up any further. Well, the reality is that Kyle Lowry and RJ Barrett are probably similarly focused on basketball as LeBron James and Kobe Bryant. After all, these are all professional players. The work and dedication that it took to get to the NBA, that level is the same for all of them. And so therefore it's quite high, right? Pardon me. But at the end of the day, now that they've made it to the NBA, the level of work or commitment that's shown by LeBron, by Kobe, is different from that which is shown by Kyle Lowry and RJ Barrett. And that's not to say that Kyle and RJ don't work hard. They probably do. They probably work very, very hard. But they are outworked by Kobe and LeBron, obviously. And one of the things that we have to kind of zero in on, that you have to recognize, and this is true, Kobe, LeBron, Ronaldo, who's the guy, the baseball guy there, Mike Trout or Aaron Judge, or the quarterback there, Mahomes. This is true of all of these high performers. Even the race car driver there, Lewis Hamilton, right? They're focusing their efforts on that 20% of things that make a difference in that 80-20 principle, whereas some of these other people maybe aren't as focused on those things. One thing I could give you, for example, Kyle Lowry, right? Great Toronto Raptor, famous up in Canada and Toronto for sure, very, very well loved. And he's famously a nice guy, right? Friendly, good to the fans, pro-social, in the community, helping out, this and that, blah, blah, blah. LeBron James recently, kind of like that too. Kobe, when Kobe was winning, was not like that. Michael Jordan, when Michael Jordan was winning, not like that, right? These were driven, focused, borderline antisocial individuals, because the focus was on the 20% of things that win you championships. And it's an 80% task making sure your fans are happy, right? If you are a great athlete in any sport, right, fans will say, hey, be nice to us, do fan service, come out to signings, open theme parks, blah, blah, whatever the stuff is that athletes are asked to do on the side. And people will say, well, you got to do these things. It's customer service. It takes care of your customers. It makes them happy. Your fans pay your bills, blah, 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 blah. Right? That is the example of mistaking movement for achievement, right? Fan service is busy work, right? You will get more fans and more revenue if you're a winner than if you're nice, right? The fact of the matter is that Toronto has had a very nice team many, many years, right? Lowry was part of it almost famously nice, well-liked team when it was him and DeMar and Jakob and the other guys, right? They didn't win, and they didn't sell as many tickets as the team that had Kawhi Leonard on it, who was not that guy. He wasn't that friendly person. He was focused and driven and a winner, right? And so that's the difference. That's the 80-20, right, principle at work in these people's lives. And it's so important that we not mistake movement for achievement, right? Same thing if I'm a real estate investor, right? Bring us back to real estate. What is movement and what is achievement? You know, if you have a problem that it costs money to solve, which you have money to solve it with, then you don't have a problem. Let me repeat that. If you have a problem that costs money to solve, and take note, right? Most problems do cost money to solve. That's how you solve most problems. If you have a problem that costs money to solve and you have the money to spend to solve that problem, you don't have a problem, right? So just break that down a little bit further. You have a car. I don't know. You run over some nails. You get some flats. You need new tires. This is a problem. But you've got $1,500 in your account. It costs $1,500 to get new tires and to have them put on, blah, 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 blah. You don't have a problem, right? You think if you're LeBron James, let's go back to him, right? Just because LeBron's a wealthy guy. You think if you're LeBron James, you take your Bugatti out and you get a flat tire, you think LeBron James stresses out his whole life because he got a flat? Of course not, right? He calls somebody, says, hey, I got a flat, take care of it. And it costs whatever it costs. And the next day he has his car back, right? Now, obviously, I'm not saying be wasteful and exorbitantly spend your money on silly things, but I think a lot of the times people get caught up trying to look for creative or labor-focused solutions to the problems that they have, thinking that, well, if I can do this myself and I can save money, then this is going to benefit me, right? And this is another kind of mistaking movement for achievement situation, right? If you have a problem and you can solve it with money, in general, solve it with money and move on to the next problem, in general, right? So if we take investing, right, and we think about this movement versus achievement thing, right? If you're an investor and you're sitting around all day looking at properties, cool, that's busy work, right? The achievement part of being an investor is making offers, right? When you make offers, things move. And in fact, if you make offers on the right properties, that's where the money is generated, right? I'm going to use Montague as an example. So Montague is a property that we bought. I guess 2.5 years ago or something like that. Triplex. Nice property. It's almost converted into a triplex. First floor, second floor, third floor units. And actually, there's a basement, semi-finished basement, partially finished basement that could totally be a fourth floor and a fourth unit. But looking into it with zoning and everything, it looks like we wouldn't be able to, and we've never really chased it down to the official point, if you will. But it looks like obviously we could have a fourth unit and we don't. We were looking for properties and we saw this property, this triplex. And it's been a few years now, so I don't remember the specifics, but I think it was listed at like $289. I believe was the original price that they wanted for it. So $289 for a triplex, which I know sounds stupid. Obviously, this was years ago, right? The prices were a little different back then. And so $289 for this triplex. And I think if memory serves, I think my partner brought this to us. I think it was Armando who saw the property, I think. and it doesn't really matter. But try and give credit where credit is due. I think it was Armando who saw the property, so he sent it over and said, "Hey, you know what? Do an analysis. Let's look at this." And so I did, and I ran the numbers, and the property looked good. I mean, excuse me, for its price and for what we were getting, it looked like we were going to make money. And then, when we really broke it down and looked at it, like, it looked like it was going to be a lot of money, maybe close to almost $1,000 a month or so. And there was a lot of upside. There was a lot of upside when I, finished my analysis and we looked at everything. And so the question became, so we were like a month out from closing on another deal that we had invested in as a group. And so now the question was, well, what about doing this property, right? So this is going back to like the productivities and making the offers, right, and doing the deals. We talked about doing the deal on this Montague, and the team was skeptical, I guess would be the right way to put it. The team was skeptical. We didn't have any money. We couldn't really afford it. We were trying to figure out how we could afford it. And originally, we put together an investment plan, a package that would include some other investors that had expressed an interest. Maybe calling them investors is not correct. Maybe they're enthusiasts who want to become investors. Either way, they did express some interest in doing a deal, and we had discussed a structure where they could bring the money and we could bring the experience and management to put the deal together. And that arrangement fell through. And so we were kind of left in a spot where last minute we had to change our plans. But before that, we were putting everything together and we thought about this, and the team was hesitant because they weren't confident, I guess, or they weren't certain that we could afford the property. We didn't have any money. We were all tied up. We were all tapped out. And I remember us discussing it, and I was pretty emphatic. Emphatic is maybe not the right word, but I was definitely very firm in saying, no, let's make the offer. Let's do this deal. Don't worry about the rest of it. We will figure that out. I think we can make it work with these guys, but if we can't, it's a good deal. Let's do it. And so we did, and we made the offer, got it accepted. Then we found out things fell through with these enthusiasts, wannabe investors. And so now we were left with an accepted offer and no money, no partner to make the deal work. And we really had to sit there for a second and think, wow, let's not get sued for breach of a contract for this agreement of purchase and sale. We need to close on this deal with money that does not exist. And so it began a couple weeks of stress, probably unnecessary stress. Like looking back on it, we were probably more stressed out than we needed to be, but we didn't know. And when you don't know, sometimes you get yourself worked up over things that maybe aren't super important, right? And so we ended up looking into private lending, I guess you could say, right? We ended up looking into private lending. I was going to say alternative financing, but we ended up looking into private lending because basically the banks wouldn't touch us. They wouldn't touch us at the time, right? And they probably wouldn't have, if they would have worked with us, right? Because maybe they would have given enough time, but if they would have worked with us, they probably wouldn't have done so fast enough for us to close on the deal. So we started looking at some private finance, and we ended up finding some private finance. Pardon me. We ended up finding some private finance. And that private finance was willing to give us all of the money for the property up front, 100%. So 100% or 0%, no, 100% loan to value. That's what they were willing to do. Sorry. No. Well, that's okay. No, I'm lying. That's not actually what they did. Sorry. They were willing to take 0% down and cross collateralize. That's actually what they were willing to do. So we did put 20% in, but that 20% came out of the equity of another property. So they charged a mortgage, a second position mortgage on another property that one of our partners brought to the table. And so what was really cool about that was that our partner was able to access that equity without actually moving any money around. Right. And so it was very cool to be able to unlock the equity in a property without incurring any of the costs that regularly associated, right? We didn't have to pay a realtor to sell the place, didn't have to pay capital gains tax, didn't have to pay any of those things, right? They just, I mean, it really is this simple. They basically wrote a note and put it in their file that said we owed them money, right, on that property. And so now we were able to take this capital that we didn't have access to before, right? We were able to take it and cross collateralize and put it into this deal. And then they supplied us with all the money to close. And for 1 year, they agreed. For 1 year, we would pay them nothing. So no cash flow or anything. We'd keep all the money that came in from this property. And in exchange, we'd pay them. And we paid, through the nose, I think it was 10%, 10 or 11%. So it ended up being like, I don't know, $25,000, $30,000 to finance it for the year. But we financed the property for the year. Don't have to worry about it. Next year, we won't be in the middle of purchasing a bunch of properties, and cash flow will be fine. We can refinance and pay them back, and then just have a regular old deal, right? So how did that go for us? Well, like I said, the property was listed at $289. When we started negotiating and going back and forth, we were able to negotiate the price down to $250, right? So we got just a phenomenal price, right? So now we got this loan, and like I said, we paid, I don't know, 25, 30 grand for the loan. So when you tack that onto the 250, we ended up paying 275, 280, but a year later, right? Because for a year we didn't have to give that money up. So we ended up paying that price, but a year later, and you know how powerful inflation and the movement of prices have been. So obviously that's basically a year where we were able to collect all of the passive appreciation and of course the rent without paying a cent of our own money, right? So it's a very fascinating thing, right? Just as an aside, obviously risk is something people talk about in investing, and you got to manage risk, and risks are scary, and obviously the economy right now looks risky, and et cetera, et cetera. And what's so fascinating is really that might be at once the riskiest and also the least risky deal I've ever done. And I would even say that's across investments channels, like, because I've invested in cryptocurrency and stocks, and I've kind of run the gamut on the investment vehicles you can use, and that's probably the lowest risk / highest risk investment I've ever done. And what I mean by that is we made money the day we signed on the dotted line. We knew we'd made money the day we signed on the dotted line. I wouldn't sit there and be like, I'm about to go spend $100,000 because we definitely got it like that. But we basically sat back and were like, oh, well, we just made money, right? So day one, we'd made money on the deal, right? What made it risky was that, for a time there, we had an agreement to buy something. We didn't have the money to buy it. And in theory, you could get yourself sued, for breach of contract when you fail to close on a deal. It's never happened to me, so I don't know how litigious people are in those circumstances, but certainly they have every right to sue you if they want to. And so we kind of took a risk there, but on the actual deal, we didn't take much of a risk, right? If anything, we took no risk. And so a year passed by. The property was not worth $275. It was not worth $289. It was not worth $300. It was not worth $315. It was not worth $340. I don't actually remember what the final valuation was, but somewhere approaching $4. Right. And so it turns out that we paid this $25,000. Right. And I just want to circle back here. Right. I said, if you have a problem and it costs money to solve the problem and you have the money to pay for it, you don't really have a problem. Right. So we had a problem, which was we wanted to buy a property, but we didn't have money to pay for it. But somebody was willing to take $25,000 from us in the future and let us use their money today to buy the property that we wanted to buy. So we had a problem, but we didn't really have a problem because we could spend money to fix it. And so we agreed we would spend $25,000 so that we could buy this property today. Well, it turns out that that property is now worth $100,000 more than what we paid for it, approximately, right, in 1 year. So that $25,000 that we spent, so to speak, to solve our problem, you can look at it as an investment with a return on investment of 4 times what we put into it, right? $100,000 for $25,000 in. Kind of a silly way to do the math because now we're ignoring the property and the equity and all the money that's spent there. But I just wanted to get you in that headspace of seeing that this was the impact, right? This was, if we go back to talking about movement and achievements, right? Mistaking movement for achievement, right? All of the busy work kind of putting together the loan, finding the deal, discussing all that stuff. That was work, and it was, but it was the busy work. The thing that made us the money was when we signed on the dotted line that said, hey, this property is yours for this price, which is below market value, basically, right? And this is what will cost you to acquire it for that price, which was the loan agreement, right? Which said we had to pay the 25 grand. Right. And so that was actually the moment of impact. Everything else was a problem that could have been solved by somebody else. Right. No, in theory. I mean, in reality, we had to find this deal. Somebody had to do that work. But the achievement was getting the agreement of purchase and sale signed, getting the seller to agree to sell it to us for that price, getting the lender to lend to us for that price. Right. And once we had done that, the deal basically put itself together. So we fast forward, made, like I said, the $100,000 or so dollars. At the end of the year, we refinanced out, paid off the private lender, and got a conventional mortgage. And now the property both has that equity. Well, both has that equity and also monthly income, right? Cash flow. And so the point of the story, or where I'm going with this anecdote, is if you're putting your effort into those impactful, into those 20% things, that's where you make all of your money, right? Put it another way, investors make their money on the buy, right? When you buy something, if you're getting a good price for it, then when you sell it, you will make a profit. Right. And when you sell that thing into the profit, that profit is determined by the price that you originally had paid for it. Right. So the impactful moment wasn't the moment that you sold the good, although that was important. The impactful moment was when you bought the good. Right. And if you're focusing on this Pareto principle, right, you always want to be focused on that 20% thing that's causing 80% of your results, not the 80% of things that are causing 20% of your results. And you can, as I said, if you have a problem and it costs money to fix the problem and you've got the money, then you don't really have a problem, right? And if you've got that 80% of things that are only producing 20% of your results, it is often a better strategy to spend money to solve those problems and to spend your time solving those problems, because your time might be more valuable, right? If I go back now to my example of Montague that I was just giving you, where we're buying this property and we don't have the money, we got to figure out financing. Well, there's an alternate strategy that I could have used, right? Like I said, if you have a problem and it costs money and you have the money to solve the problem, then you don't really have a problem, right? I could have sat there and said, hey, we don't have the money for this property. Let me solve this problem. Let me go get more money. And I could have taken extra shifts at work. I don't work that kind of job, but let's say I did. I could take extra shifts at work. Maybe I go gamble some money on the stock market. Maybe I go bet on some sports games or go down to the casino and see if I could wrangle up, the hundreds of thousands. I don't know how much we needed, $200,000 or whatever it was to buy the property. See if I could scare up that money, right? And there's no doubt, with some supreme luck, some dedication, and a little bit of time, it might be possible, right? I wouldn't recommend trying to increase your money that way. But people do get lucky; they win things. I was watching the UFC fight last night, Usman and the British guy there. And anyways, it was a good fight, and Usman was the favorite going into the fight, and definitely, guy's a killer. And they went out there and they fought, and they won all 5 rounds. And one of the people I was there watching it with said, partway through the fight, hey, I should have put money on not Usman, but the other guy, the underdog, because there were points in the fight where he looked pretty good, right? But ultimately, Usman dominated him. They went 5 rounds, and Usman, I don't know. We're about a minute away from the end of the fight, and Usman is just mauling this guy. And doesn't the guy throw this undercover? He leads with this right jab and just thwacks Usman with this left kick right to the side. Boom. Dude never even saw it coming. He was out. He was out before he even hit the ground. Knockout. Won the fight. And the person I'm here watching with is saying, damn it, I should have made the bet, right? I should have placed the money. You can make money that way. People do short term. It's not a great strategy long term, but you can. So I could have sat there and used means like that and tried to build up my resources that way. Had I done that, right, just focusing on the 80%, had I done that, we would have lost the deal. I didn't have the time to make the money to make that deal work, unless I got extraordinarily lucky, right? So I just didn't have the time to make it work that way, right? I could have sat there and pooled together, 15, 20 people and said, hey, each of you, I don't know, put $10,000 into this loan instrument and then I'll pay you all out and which would get real complicated and annoying. But in theory, could be done, I guess, right? It's not very realistic, but maybe. Or I had a problem. It was expensive to solve the problem. $25,000 is not cheap, right? But at the end of the day, it cost me $25,000 to solve this problem. I didn't have to focus on making more money. I didn't have to focus on finding people to lend that money to me. I found somebody who their focus was finding people to lend money to you, and their base to get somebody to lend, for them to put together a deal with somebody lend me some money. And actually, it's a bit more than that because I had to pay whatever other fees, but $25,000, right? So the problem solved itself, and you're able to do the deal and make the money. And the thing is that, I guess what I would say is I don't always practice what I preach, right? I don't think anybody ever does, right? It's always easier to talk than to do. And so ultimately everybody, no matter who they are, their level of attainment, they're not perfect because they're going to tell you the ideal and nobody meets the ideal. We just try to. But in an ideal world, right, you would do all of your deals as we did Montague. Not in the sense of, desperately struggling to find the money, although maybe a little bit. But it is in finding the deal and getting it signed away. That's that 20%. That's that impactful part. That's the 20% activity of an investor, right? Don't mistake movement for achievement. If you're sitting there and you're working hard and you're busy all the time, it doesn't mean you're achieving things, right? And it's so easy to get caught up in your own life. You've got yourself, maybe you've got your wife, maybe you've got kids, maybe you've got your family, brothers, sisters, mothers, people that you're taking care of, right? You've got work, maybe you've got a boss, you've got bosses, or maybe you've got clients and customers, but either way, right? All these people who are demanding your time and your attention. And it's so easy to get caught up serving all of those needs and thinking, oh, I'm being productive. Oh, I'm doing what I need to do because I'm putting out all of the fires of the people that are in my life, right? And certainly, obviously, unless you're an asshole, there is, some requirement that you spend time and effort on your family and your friends and your loved ones and do that busy work, your customers, your clients, et cetera, et cetera, et cetera. But we have to be very careful that we don't mistake that work for being impactful, right? And it may be like if I liken Montague. So just to go back, I just want to fully flesh out that deal. So That deal had partners in it, so I didn't make the full 100 grand we made that year. I made a portion of it, but let's just say I made, I don't know, let's call it $30,000 or $30,000 or $40,000 on the deal, kind of a thing. At the end of the day, like when all is said and done, the actual labor that I probably put into that deal, let's call it like a month of stress, 3 weeks of stress trying to figure out the financing thing. And then like actual work, call it a day or two. So like 3 weeks of stress and like 16 to 24 hours of actual physical work and labor. Probably not even. 24 is probably too much of an exaggeration. For about $40,000 at the end of the year. Right? If you scale that, and I didn't, so this is what I'm saying, I don't always follow my own advice. If you scale that, I'm basically saying that the deal took a month to make $40,000. If you make $40,000 a month for a year, you've made $480,000 at the end of the year. $500,000 is what you've made. Now, keep in mind, right? That property needed some renovations. I didn't paint it. I didn't renovate it. I didn't do any of that work, right? Property needs management. I didn't do that. I hired somebody to do that, right? The property needs tenants. Again, I didn't do that. Hired people to do that, right? So those are all problems that needed to be solved, that cost money to solve, and that we had money to solve. So we were able to solve, right? They weren't really problems then because you just paid the people to solve them. And I mean, I'm oversimplifying. I'm making it sound like, you just pay money and everything gets solved. And that doesn't always happen because, you got to find the right people and make sure that they're doing their job and et cetera, et cetera. There's more that goes into it than just paying the money. But in general, right, you're paying for goods and services, you're going to get them. And so they're going to solve problems. But that year, if I go back to that year and I think about how much money I made that year, if I took like my day job, I don't know, maybe I made $50,000, $60,000. I'm not a particularly high paid person. So I think that's probably what I would have made that year. If I take my investments in total from that year, I probably made, that's actually a tricky number. I am not too sure how much I would have made from investments that year. But let's say maybe $100,000. Let's say maybe around there, a ballpark, maybe a little less. Maybe 75, but whatever, something like that, right? So if I take this, $30,000 to $40,000 that you made off this one deal, and you put that in the context of a year where maybe you made $160,000, right? That's a quarter, basically, of the income that I made that year, probably realistically speaking. But the effort was less than a 12th of a year. Right. And again, I think I'm exaggerating. Those is probably less than even the amount that I'm saying. Right. Again, 3 weeks of stress. Keep that in mind. Right. 3 weeks of stress. That's worrying, not necessarily working. And then, 16 to 24 hours of actual working. And that made the money. Right. I spent countless hours at work at an actual job, making nowhere near the same amount of money, being busier for sure. Well, without having that impact, right? So it's one of those things where I think we should really, really, really focus on that. I can't emphasize it enough, right? Is that there's so many things that we do on a day-to-day basis that are busy work, not impactful work, right? Like, let's do a little thought experiment, right? So I just said $40,000, 3 weeks of stress, 24 hours. So let's just use that as the model. How much time do you spend commuting right now? Do you spend 5 hours a week? That'd be half an hour in, half an hour out. Do you spend 10 hours a week? 1 hour in, 1 hour out, right? Do you spend more time than that? I hope not, because I've done 10 hours a week of commuting, and that sucks. I can't imagine doing more. But if you do, make some changes to your life, because that's rough. That's hard on the soul, regardless of what your answer is, right? Well, let's just say you're doing 10 hours. So an hour in, hour out, which is probably a bit more than the average, but it's probably pretty close, right? If you do that, there are 250 work days in a year. So if you spend 2 hours per day, 250 work days in a year, you're spending 500 plus hours commuting, right? Now, I said that in 24 hours and 3 weeks of stress, you can make about $40,000 a year. So if we do the thought experiment, you could, in theory, spend the money to reclaim those 500 hours, right? Have somebody else drive you. Maybe it's an Uber, maybe it's like a carpool system where you set up with a coworker or somebody. You pay them every day to pick you up and take you and drop you off, something like that, right? There's a whole bunch of ways to do it. I remember I was talking to one guy, successful entrepreneur, and he launched a couple of companies. He was a young guy. And he said one of his keys was he realized when he was about 20, 21 years old that he bought his first car. And he realized right away how much of his time was being wasted driving the stupid car around. So he had a friend who kind of handy friend to have because he, I guess, doesn't really do much, didn't really have a lot going on in his life. And he said, hey, look, I'll give you this car. It's all yours. You have it. Put it in your name. All you have to do is drive me around if and when I need it. And so he took his $35,000, $40,000 Camry or whatever it was, and he gave it to his friend. Said, here, this is your car now. And his friend agreed. He'd drive him around in exchange for the free car. And so this guy got, to be driven to work and meetings and stuff like that. He basically got a free chauffeur, free, quote unquote, right? You could do the same thing, whether it's Uber or, like I said, it's some carpooling thing, whatever it is. You can reclaim those 500 hours. Now, if you took those 500 hours and you spent them, every day you get up, you get in the car, spend an hour, connect your laptop to your phone or whatever it is you do. Look for properties, find good deals, make offers. If you got through, I don't have my calculator at hand, but if you got through, let's just see here. I'll just math it out on my phone here. So we've got 500 hours for the year, and we got 12 months. So that works out to be 42 hours a month. Approximately. So in 42 hours, that's almost 2 full working days, could you find one property and get a deal put through per month? The answer is probably yes, right? You could, in theory, do 10, 12 deals, make that extra $400,000, right? Now, obviously, not every deal pays like the one I just described. Not every deal is quite like that, and it does get tricky to private finance 10 or 12 deals. It can get like quite tricky. But if you were focused on that work, 500 hours is 1/4 of your work year, right? It's a 2,000 hour work year. So 500 hours is a quarter of that work year, but you stand to make $500,000 focusing on that quarter. Whereas if you spend your time focused on your job that's paying you $60,000, $80,000, $100,000 a year, right? That's substantially less remuneration for a lot more time invested, right? So it's movement. You're busy because you have a job. You're busy because you have a commute. You're busy because you're doing these things, but you're not necessarily achieving that much as a result of them, right? And then you have things in your life, hopefully all of you do, that you can point to as investments or activities, and they don't need to be financial investments. Maybe you spend time with your child, right? That's an investment in their future, investment in that child's success. Maybe spend time with your parents. That's different type of investment. Maybe it's not even an investment. Maybe it's more like the return on their investment, but that's something that's important as well, right? Like not everything needs to be about money and dollars and cents and making a profit, but where can you be impactful, right? Because it turns out, if we say you want to have an impact on your family, you want to be there for your kids, your parents, et cetera, et cetera. Well, if you could spend 500 hours a year and make 5 times what you're making right now, then that would free up 2,000 hours for you to spend with your kids, your family, your wife, et cetera, right? So it is because our focus is on the busy work that we don't have time for the impactful work, right? And for most of us, I believe, could be wrong about this, but for most of us, I believe we've been trained by a school system, right? The public education system has trained you to chase after busy work, right? When you went to school, right? If you sat down in class and the teacher told you how to solve a problem and you had a better way to solve it, let's say, I don't know, there's like a math problem, right? And the teacher sat there and they're like, okay, we're going to do, I don't know, bed math, blah, blah, blah. We're going to work through this problem. It's going to take you 10 minutes of problem. And you sit down and you go, oh, well, I can do that math in my head. So here's the answer in 1 minute. the teacher would scold you and tell you, well, no, you've got to do the work. The emphasis was on the work. It wasn't on the achievement. It was on the work, right? Now, that was true for a lot of things, right? There were a lot of things probably in school where you could have taken shortcuts, but you were told that you weren't allowed to. A great example is maybe you were in math class. Maybe you don't like math. Maybe you're not good at math. I don't know. Not everybody does, right? And maybe you were in math class. You weren't doing so well. And maybe you sit down with some other student and you study with them, or you learn off them, or maybe you even straight up cheat off of them, right? A teacher would, of course, maybe not if you were studying, but certainly if you're cheating, your teacher's going to give you a hard time. Oh, you know what? You can't cheat off Johnny. That's the world's stupidest advice. Tell me when in life can you not cheat off Johnny? Explain to me what situation I can put you in where you're doing business of some sort, but you're not allowed to call an accountant to do the math for you, right? Explain to me what situation in life where you're doing business or something and you're not allowed to call a lawyer to review or write up a contract for you, right? There is actually no situation in life where you can't cheat, right? If you can spend the money, time, resources, or relationship capital to have somebody help you, then somebody will help you and you can be more successful than you ever could be on your own because you can't cover all your blind spots, right? But you've got to be focused. You got to figure out what is that 20% activity that you can put your focus into that's going to generate as much value as possible, right? So that it frees up the resources to buy those other people. And then you have to look at buying those other people, right? Whether it's on a contractual basis or whether it's on a contractual basis or what's the other word? Or like a not consignment, but what's the forget it. Consignment is not the term I'm looking for, but I guess it would apply, right? A consignment basis, kind of like a lawyer working for you. They only get paid if they win. But depending on the nature of your relationship in terms of pay and compensation, right? You have to look at those as investments, right? And at the end of the day, if you're spending money on things, so in my example, right, if we now have to spend, let's say, and my example gets a little ridiculous because once you start earning the $500,000, maybe you quit your job. But on your way working up to there, right, where we need to free up that 500 hours, well, maybe it'll cost you, I don't know, let's say $20, $25 to get taken into work and taken out. So that's $50 a day. That's not nothing. That's not chump change. 250 days in the year, right? So 50 times 100 is $5,000, 10 grand. We're talking about $12,500 a year or so that you're taking off your paycheck. So if you're making, let's say, $80,000, we're taking an eighth of your paycheck, right? Am I doing that math right? Yeah, we're taking an eighth of your paycheck to facilitate you to have 500 extra hours of time, right? So now you're going to use that time to hopefully generate many, many, many times that money. But that's an investment, right? The cost of that driver, carpooler, whatever, to free up that time is an investment to give you that time to make more money, right? Similarly, right, the $25,000 we paid for that property in interest payments, right? That was an investment because we couldn't afford to buy the property any other way. And we knew that the property was a good deal at the time. Granted, we didn't think we'd do quite as well as we ended up doing, but we knew that we would do well on that property. So that was the price that we had to pay. That was an investment, if you will. And I think too often, we're caught up in this kind of scarcity mentality where you don't want to invest. You don't want to spend the money on these things because you're worried that it's just going to be lost money, right? That, I'm going to spend all this money paying for Ubers to work or whatever, and I'm not going to make any extra money. I'm going to sleep in the Uber. I'm going to whatever, waste the time, squander it, and not make back that money. And certainly, hey, if that's what you're going to do, I'm not advocating you waste $12,000 or $15,000 a year on Ubers so that you can have some extra beauty sleep, right? But what I am pointing out is that there's a lot of things in our lives. This Uber commuting is just one example, right, of ways in which we are busy. We're doing busy work, right? that are making us feel like we're busy, making us feel tired, making us feel, but they're not necessarily having the impact. They're not necessarily allowing us to achieve our ultimate financial aims, right? And so it's very, very important, right, that we recognize this. And again, this just could apply to any business, right? It doesn't need to be real estate investing. I mean, if you've got, I'll pick on a cleaning company because I know someone here's got a cleaning company, right? If you've got a cleaning company, right, it might feel real good to scrub the toilets, and don't get me wrong, the toilets have to be scrubbed, but the thing that's making your company work is getting in front of clients and making sure that they know who you are and they want to buy your product or service, right? If you can get a cleaning contract from a facility and they're going to pay you, I don't know, $5,000 a month to keep their facility clean, you can hire someone for $3,000 a month to actually do the cleaning, right? That's the thing. And if you sit there and you're always thinking about you doing the cleaning, right, instead of hiring somebody to do the cleaning, well, then you're always trapped, right? Because there's only so much you can clean. And at the end of the day, if you're trying to build any business that can sustain itself, you've got to be taking the money off the top, the surplus, the profit of employing somebody else and charging accordingly, right? When you go into, I don't know, Staples, for example, and you go pick up a printer, which is probably a bad example because the margins on electronics actually usually suck. But let's just say you go pick up a printer. Well, they've tacked on a 30% margin, right? Whatever they paid for that printer, you're going to pay 30% more, right? And that's where they make their profit from. And that goes all the way back to what I was saying at the start of the seminar, right? You make your money on the buy as an investor, right? And there's all sorts of investors. The people that own Staples, and obviously that's a corporation, but the people who own Staples are investing their money in inventory, right? And they're making 30% margin on it. And if they overpay for printers, right? If they buy, in a market where average printer costs $150, if they're paying an average of $250 per unit that they buy, that means that they're selling them for $370, right? Well, I, as the customer, I'm not buying your $370 printer when in a market where I can get a $150 printer that's just as good. And so they will now lose money because they erred on the buy, right? So it's the same thing for you. We have people now, obviously the market's moving against a lot of so-called investors, and they're not really investors. Like, I'm not hurting as a result of the market. I'm less wealthy than I theoretically was on paper a few months ago. That's true. But I don't sleep any less soundly today than I did a year ago in terms of thinking about my investments, right? You're in a market where you need to be, I guess, focused on how do I want to phrase this? Well, I guess we're in a market where people have been focused on finding these deals that weren't really deals. They were buying things thinking they'd be able to sell them to the next sucker instead of buying things because they were actually a good value. And so now the market is turning on them and they are seeing their value erode or decay because it didn't really exist in the first place. They weren't buying something good and sound, right? But if you're out there and you're buying something good and sound, then it's good and sound. The day that you bought it, and this is the thing that investors come to understand. It's the thing that, it's taking me a while to understand, but something that I'm kind of hitting my own stride with is that when you're investing properly, on day one that you made money. Right away, you have a winner and you have relatively little or no risk, right? As I was saying with this Montague deal, just to recap it one more time, right? This was a property listed at $289,000 that we negotiated down to $250,000. And then we had to pay $25,000 to make the deal work. So for a total cost of $275,000, we were getting a property that was listed at $289,000, which I think was probably a pretty reasonable price for it. And certainly the market thought 1 year later that price was ridiculously low, right? And so that is how you are accumulating the money. Everybody's worried about risk right now. It's risky, the economy, blah 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 blah, and there's always risks. I mean, our government could decide tomorrow to abolish private property, and we've got civil war on our hands. The world's a weird place. Who knows? There's risks, but in general, Right? If you are analyzing things correctly and you're understanding the deals correctly, then you can go make the money up front, and then you can scale by investing and doing more of those types of deals. And there is an upper limit. You run into issues. Financing is the thing that really is going to slow you down. But there are ways and there are means around that, right? And if you recognize that that's your problem, then you can spend money to solve the problem. Because if you have a problem that costs money to solve, you don't really have a problem. Right. So, lastly, before I go, I just want to talk a little bit about, obviously, if you're going to understand the deal up front when you go into the deal, and that's going to make you the money, right? Then you need to make sure you're getting an accurate picture of your deal, right? So, I had somebody, I had somebody who did their first deal year and change ago. A little while ago, anyways, and I kind of helped them out a little bit. We got them going and found a good deal, and they put it together. And I mean, they did most of the work. I was just kind of there in an advisory capacity, but we put together a deal and found everything, and looked like a good deal. Pulled the trigger, bought the property, did the analysis, everything looked good. Ran into just about every problem you could run into with that deal. I mean, like some outrageous problems and some pretty standard, landlord tenant stuff. And it was definitely a bit of a roller coaster ride. Anyways, the deal made sense on paper because it was going to cash flow heavily. Well, maybe heavily is too strong. It was going to cash flow well, right? Which is all that you're really looking for as an investor at the end of the day. And so put the money in. And of course, we all know what happened in the last year and a half or so. And so their property is now worth quite a bit more than what they spent on it. And they did some active appreciation too. They did some rental stuff. And so they really saw the value. And so they were able to use that money last year. Something unfortunate happened to them. And they were able to take some of that money and take care of themselves for a period when they hurt themselves. And so, I mean, I think that's just awesome, right? They spent that year probably working, but not focused on the achieving. And then they spend a little fraction of that year working on the achievement part, right? Working on this investment, and they put that together. And then you fast forward, I can't remember, year and a half. I guess fast forward probably a year and a half. And they're now able to sustain their entire lifestyle off of that one decision that they made. Right now, you think about that. You worked all year last year, the year before. I mean, if you're lucky, maybe if you're not, COVID got in the way. But in general, you let's put it a different way. You earned an income over those years, right? Could you take that income and now survive this next 6 months based on that money you made 2 years ago? For the most part, you probably can't, right? But this is an example where the achievement, which was the minimum of his effort, right? The Pareto principle, this is the 20%, that's 80% of your outcomes. So this was the minimum of his efforts that year, but it turned out to be the maximum of his rewards in years to come, right? So that's something that we should all be very cognizant of, right? And be trying to make the right moves so that we can be doing deals like that and making sure that tomorrow is better than yesterday. Right now, when I'm looking at properties, I'm analyzing them 5.25% to 5.75% interest rate. Now, the reason I'm doing that is in part to build in some margin of error, and is in part to account for the stress test, right? If you're going to get a conventional mortgage with CMHC insurance or CMHC eligible, you're going to need to pass that stress test, right? And that stress test requires that you be able to carry the property at 2.5 points above the market, the prevailing market rate, right? So if you're applying for a mortgage right now at 3.5% to 4%, which is where rates are at right now, tack 2%, sorry, not 2.5%, tack 2% onto that for the stress test. So my 3.5% becomes 5.5%. And so that's where we're analyzing things right now. In general, I'm taking a more positive view of vacancy, right? Before, if you had a 5% vacancy rate, I'm, trying to look at the numbers and be objective, but you gotta be careful with the numbers because they're not always totally honest. You gotta kind of get your own sense of things. I'm in general estimating that vacancy rates are actually lower than they are being reported. Obviously, as the economy kind of stalls or whatever it is that it's doing, if people are losing their jobs, they're losing their means to service a mortgage. If they lose their means to service a mortgage, they've got to sell, and if they've got to sell, chances are they're not turning around to buy again. They're probably saying, okay, let me hold off, let me rent for a little bit. Right. And so as that happens, that means that your supply of property that's available for sale is increasing, which is good for prices, bad for the people selling them, but good for the people buying them. And your demand for rental units is increasing because those people are selling out of their homes so that they can rent. And so to me, that means that probably, right, obviously the statistics we get from the CMHC and everything else, they're trailing statistics, right? They're going to tell us what happened 6 months ago, 3 months ago, quarterly, semi-annually, annually, right? So if I know that the vacancy rate was 3.5% last year, chances are it's 3 or 2.5 or maybe even 2%. So I'm being more lenient on vacancy rates right now, and I'm being harder on interest rates. So I think you can certainly look at the property and say, okay, it's going to be less vacant than it would have been, but I'm going to pay more in interest on that property, right? And you got to kind of factor that in. And of course, if you find a property that after taking into consideration all the interest and the taxes and all the expenses, it still looks like it's a winner, then those are the things you should be making offers on, right? And I've said this many times on this seminar, but I'll say it again. Even if you're not finding those properties that look like a deal like that, you can make the offer anyways. If I just one last time talk about Montague one more time, the property was listed at $289. We negotiated it down to $250, right? So you could ask, that's a $30, almost $40,000 discount. Like, we got a good, sweet discount. They wanted to sell, and whatever, it worked out. That deal at $290,000 plus the $25K plus is not nearly as attractive as what it was at the $250 plus the $25K, right? So that's something as well where, if you're looking in the market and saying, hey, I don't see these amazing deals Aaron's telling me stories about, maybe that deal is not listed, right? Maybe that deal only emerges after you make the offer and you go back and forth with the seller. And that's why I'm saying that as an investor, that 20% activity for you, that that achievement that you're looking for rather than the movement, right, is going to be making those offers, right? And that's where you're going to make your money. That's where you're going to make your return on investment, right? And that is where, if you want to, if you're willing to devote enough time, again, maybe 500 hours a year, maybe 2,000 hours a year, maybe 2,500 hours a year, right? It's up to you how much time you really want to invest in doing that. You can make potentially a lot of money, a lot more money than you're making now, right? And obviously there are people out there who make tens of millions of dollars a year. I said you make $500,000, so let's 10x that, right? Grant Cardone, right? If you 10x that, that's $400,000 a month that you'd be making off of deals like that. Like, is it possible to make $400,000 a month off of real estate deals? In my head, I think it'd be hard, but I think that might just be a limiting belief. Like, yeah, it should be pretty easy, really, if you're finding the right deals. Like, if you just scale up, right? Instead of my $250,000 property, you have a $2.5 million property, and all the other ratios remain the same. You basically made it there, right? So it is very, very much possible if you think big and if you're doing the work. And that's the thing that gets most of us, right, is not doing the work, or doing the work that makes you feel good because it keeps you busy, but it's not having the desired impact, right? And like I said, I think we're all guilty of it at times, just because when you're doing the work that keeps you feeling busy, there's something reassuring about being busy. Like it's a good thing. Like I said, you went to school and you were basically taught that being busy is more important than being productive, because teachers are incredibly unimpressive people usually. And not all, of course. I'm not trying to generalize. There's some great teachers out there. I think I'm married to one of them actually, but in general, uh, a lot of the teachers are, leave a lot to be desired, right? And so you're being taught these kind of really mediocre skills by these very mediocre people, and at a young age, when you're internalizing these things without really realizing what you are consuming, right? And I think that results in a lot of us being much more focused on being busy than on being impactful, right? And the real wealth is not in how much time you spend doing something; it's in how big of a problem do you solve, right? How big of a problem are you able to solve? So that's it. That's what I want to talk about this week. I won't drone on any longer. I hope you each got something here that you came looking for. I appreciate, of course, your time and your attention this week and every week. And I look forward to hearing, maybe in the future, ways in which you have identified the movement in your life and the achievement in your life and your plan, your strategy, your vision for how to better align your efforts with the achievements that you want to see. Right? Like I said, the example of getting a driver, that might be it. Maybe scaling back your hours at work so you can focus on doing the thing. Maybe, putting aside 2 hours in the evening that you were previously spending, on the couch watching TV or whatever. And the options are endless, and everybody's life is different. So I can't suggest every possible scenario, but I'm so confident that there's a lot of room for growth in your own life if you want to look for it. And it's funny I use the word confident, because I think confidence is a big part of the equation, right? It's hard to do even that deal that I was just talking about in Montague there without some confidence that your numbers are accurate, that things are going to work out the way you're predicting, et cetera, et cetera. But it is absolutely possible. So it's something we need to be aware of. And yeah, so thank you. Have a wonderful week. I guess this is our last full week of August? Is that where we're at already? I guess so, right? My calendar is not cooperating right now, but it looks like, yeah.
No, there's another one.
This is the last full week, and then we have a half week. Yeah, the week of the 29th to the 31st. So I guess I'll see you one more time this month, and I look forward to next weekend. And if you have any questions or comments, now's the time. And otherwise, I'll see you next week.
Always great stuff, Aaron. Thank you.
Always a pleasure, Liz. Thanks for joining me.
Have a good one. Take care, everyone.
Ciao. Okay.